Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and today is the 17th of April 2024. I'm happy to be with you guys today. We have quite a lot to go over, so let's dig in. The markets have been relatively choppy, and of course, the tensions are still very, very high in the market. We've been seeing what's been happening with a lot of the risk-on assets from the forex pairs, like the majors, Euro, GBP USD, AUD USD, NZ USD have all been in a negative territory now for about 2 weeks. And of course, crossing over to the stock market, things have also been looking a bit down. Yes, we are seeing a little bit of recovery as of today, Euro session, but the markets are still relatively down. And of course, the reason for that has been the very, very high tensions that we've been having in the Middle East. And of course, what has really reinforced that bearish pattern we are seeing on a lot of assets has been the constant back and forth between Iran and its proxies, and of course, Israel and its proxies as well. So we've been having a lot of tensions, and also the fear index, which is the VIX, has reached its highest level since October last year. And the last time we had the VIX that high was when we had the invasion of Israel by the Hamas rebels, if you guys recall. That was, I think, on the 7th of October 2023. And that is when the VIX reached the level that it's at right now. Of course, again, giving us that indication that there are a bit of some fears. Now, treasuries, and of course, one of the reasons why the DXY has been rallying quite a lot has been, first of all, the US economy has stayed quite resilient in the face of the different tensions. We've been seeing that the inflation data we got this month actually came in much, much higher, and is providing that strength to the dollar. Looking at the different economies, I think it's the US that has stayed resilient. And even when we are seeing a bit of slowdown with the other economies, the US economy has been showing signs of strength. And possibly also why the Federal Reserve, also a lot of the Fed speakers that we have been having, have been indicating that they are going to keep rates higher for longer. So that again is going to be something of a discussion as we proceed today. So that's really what we've been having. On other parts of the news, we also are in earnings season. For those of you that are trading the indices, if you're trading the stocks, we are in earnings season right now. We are expecting earnings to come out for the past quarter, which is Q1 2024. Recently, of course, a number of companies have been releasing earnings from the big banks, the JP Morgan, Citi. We also had some earnings coming out from Morgan Stanley. That was yesterday. But of course, we haven't yet seen the indices, most especially the Dow. The Dow hasn't yet responded to those earnings. We're expecting maybe over the next few days as the market prices in the tensions. And also, of course, the latest on the tensions between Iran and Israel is Iran, of course, retaliated on Sunday night. If you guys were awake at about 1 a.m., you must have seen social media going crazy over that attack. So they attacked again with about 500 drones. And then the drones, of course, hit the Iron Dome, Israel's Iron Dome, the missile defense system. And then, of course, after the drones, they responded with missiles. Okay. But because of that Iron Dome, there weren't so many injuries. But Israel said that they are going to retaliate for any attack. And of course, I suspect the reason why we saw gold selling a little bit on Sunday was in the face of the statement that came from the Iran's mission to the UN. They indicated that that we should not expect any more attacks from Iran. But when Israel then came in and said later that, oh, we have to respond to that attack we got on Sunday, that I think explains why we saw gold. If you guys, if you observed gold on Monday, it actually reversed its sell, and we saw it selling from, we saw it buying from 2,300 and around 20. Yeah. So generally, that's what we have regarding the news. There isn't really much. Yesterday we had Powell, and of course we are going to see some of the comments that we got from the Fed chair. We shall be seeing those comments as we go along. Awesome. So let's cross over to the comments from Fed Chair Powell and see what comments he made yesterday. So a lot of the comments we got from Fed Chair Powell were really hawkish comments. They came in, and I believe that the comments were really much in favor of the dollar. We saw that he reinforced that there's going to be a need for the rates to actually stay higher for longer. And of course, I believe that is in the face of the high inflation data we've been getting. Recently got CPI data, which came out very high. And also, if you guys have been trading, you must have observed that the US dollar has been on a very, very strong uptrend. And the reason for that, on one hand, was because of that higher inflation, also because the Fed is now switching to giving us some kind of a hawkish commentary with a lot of their comments they are giving. So some of the comments you get from Powell, they are here. He said, if higher inflation persists, the Fed can maintain current rate as long as needed. So the current rate for the federal funds rate is currently 5.25 to 5.5%. They haven't done any cut. They haven't indicated they're going to hike, but they're going to keep the rates as is. Okay. So the other reason, of course, that I've also hinted on is the US economy has been quite strong. Okay. So remember that for the Federal Reserve to do any cuts, it will only be so that they can reaccelerate the economy. It will only be so that they can get the economy up on its feet. But the US economy still looks quite resilient in the face of whatever it is that we are seeing. And of course, the backup for that has been the high inflation data and also the GDP that we got for the previous quarter. Now, we also got some comments from Fed's backing, who has also been saying that the CPI data has not been supportive of a soft landing. There we have it. The CPI data has not been supportive of a soft landing. So again, that really reinforces the hawkish, pushback by the Fed. And I'm thinking, guys, that we are going to see a fairly strong dollar. And of course, the dollar should stay stronger as we go towards the first Fed cut, which most likely is going to be sometime around June, July. And that's when we should see the dollar getting weaker. Now, we're also going to be able to see how the dollar typically does during election years. We'll observe that as we go along. Now, looking at the current FedWatch tool, this is how things are looking. So if you look at the one for May, the May meeting, which is going to be next month, there's currently a 98.1% chance that we do not get any cut from the Fed. Okay, so I think, of course, the reason why the probability is pricing in and has also been steadily rising from about 70%. It's now currently at about 98%. This is majorly because of that hawkish pushback that we have been getting from the various Fed speakers, plus also the data that we have been getting from the US that has not been giving any premise for them to really cut rates. So that's why we should, if you're trading GBP/USD, Euro USD, expect more weakness for those particular pairs. Now, if you look at the month of 12th June, we are seeing that the figure is still relatively high. It's now at 84%. So yes, it's not at 100%, but since it's higher than it's lower than the previous month, we can expect that as we go towards July, we should potentially see the first rate cut coming in soon. Okay, so now for July, we are seeing that there's a 58.5% chance that we get a pushback from that target range, possibly to the lower bound of 5% to 5.25%. Okay. Now, going to November now it increases more on the side for the cut. So the first cut for the Fed should come anytime between November and December. And of course, since the Fed is data dependent, what this means is that a lot of the data that we get between now and then should then support whatever decisions that the Fed takes. Now, let's look at the DXY and look at what it's doing on the time on the trading view. So if you look at the DXY, we had a very sharply higher DXY. And of course, I've been bullish on the DXY. If you've been attending the snapshots, I think my analysis on the DXY has not changed. I've not been switching from side to side. It has been one side, and it has been bullish for the DXY. Of course, the reason for that has been the expected pushback on that rate cut narrative, which we're having. And of course, as you can see here, we're actually having the DXY breaking through this high we had on the 13th of Feb, and it is now on its way to the November highs, rather October highs. Okay, the last time the DXY was here, the indices were on their knees, but now we have the indices at record highs and the DXY actually heading back to its record highs. So we should see a much stronger DXY or a much stronger dollar as we go into the rest of April and also possibly into May. And of course, that is on that de-risking. A lot of people are switching over to the treasuries and to the dollar to protect from any risks. Yeah, so looking at the calendar for today, this is what we have on the calendar. We had the CPI for New Zealand coming out. It came out sharply lower, possibly one of the reasons why we are having a fairly weak New Zealand dollars of this morning. And of course, as we go into 9 a.m. Today, we also had some data coming out from the UK. The UK has been showing signs of some kind of slowdown. And of course, that is why the Bank of England has also been considering potential rate cuts to try and reaccelerate the economy and get it back on its feet. Looking at the CPI data that we've gotten today, we're also seeing that that's actually true because the CPI data has come out lower. And of course, I'm expecting that we should see a relatively weak pound as we go into the course of the day. So we also have some data coming out for the Eurozone, CPI data for the Eurozone. The Eurozone has also been having a bit of sluggishness, both on the CPI data plus also the GDP data. And we've been having a number of countries like Germany that have been having close to zero GDP growth on a quarterly basis. And of course, same as the UK, we should see some rate cuts coming in sooner than the US. Okay, that's really it. We might want now to cross over the MT5 and see what we have happening on the charts. So we're going to cross over to the MT5 in a bit and see what's happening over there. Okay. Okay, so let's look at the indices. Yeah, guys, kindly put whatever it is that you want me to go over. You can just put that in the chat, be able to handle it. Okay, so this is where we are at as of now. This is where we're at as of now. So we have indices are relatively choppy. This, of course, is of a range within here. It seems to have held its ground. And of course, it looks like the selling momentum has paused for it within this area here. So I'm not expecting us to possibly see a move lower for the NASDAQ. If we do get a move lower today, it's possibly going to be towards this line that I've drawn for you. This is on a H1 time frame. The fact that we have liquidity sweeps, and of course we are seeing that range price action is just giving signs that possibly it's holding its level for now, and of course until all over the world. And of course, if the VIX holds its current level, we are going to go to the VIX and see what the VIX is doing. Then we should steady move higher for the Nasdaq. Now, of course, we are also in an earnings season. And of course, if we get any strong earnings for any of the companies, I don't know which companies are reporting earnings today. We might have to review the earnings calendar and see. But should we get strong earnings, then we should see a move higher for the Nasdaq and possibly see it moving higher. Now, crossing over to the Dow Jones has also been in a choppy trade. However, it seems to have started its inversion and it's steady move to the upside. Okay, the banks in Stanley that reported really better than expected quarter earnings. We've been seeing that kind of move. See a steady move possibly over the course of today that should potentially take it at least up to there. Now, if you're looking at how to trade the Dow, you might want to look into some buys, potentially some sells, and make sure that your stop loss is relatively tight, in case we see it moving higher. Rather, just in case you see it moving possibly to this level up there. Now, look at gold. Gold very strong move to the upside. That safe haven. The reason why we saw gold moving higher on Friday, I actually gave you guys a bearish call for gold on Friday because the tensions were really heating up a lot. So on Friday, we saw gold moving up and it actually moved higher. And then we saw it actually sailing below that level. And it's now back to some kind of an ascending triangle. Now, if you look at gold, you notice that we had a liquidity sweep around this level here. And of course, that sweep was around the time we got those announcements from, there were some announcements from Israel. Israel said that they are going to retaliate for the Sunday attack. So I think when we got an announcement, we saw gold steadily rise. So I'm expecting gold should potentially now going to aim to take out this high that we had around 24,246. If gold fails to move to the upside, then I'm thinking the level that it has to take out has to be the bottom of this week, which is at around 2,328. But gold is looking relatively bullish, and we should see it moving higher, possibly to 2,407. Those are my thoughts on gold. Now, looking at Euro USD is in a very steady downtrend. We've been seeing how that data we got from the CPI, which was somewhere around here. We had very strong CPI data for the US, and of course, that is what knocked it. Is what knocked the Euro USD, and you can see that moving averages in the H1 time frame reinforcing that downtrend. Right now, of course, we have the 200-day moving average still looking very much higher than where the price action area is. So we should either see Euro USD breaking out of our channel here. So I've joined this channel which we are in. This is a descending channel. Should have a move outside, then we might get some temporary support for the Euro USD, at least back to this level here. So you might want to look for some potential buys at this low here. Just in case we see the USD recovering, then we should see a relative recovery to this level here. Now, when you go, you see that we are now close to the October lows. So I do not think Euro USD is going to test parity. That's not going to happen. Euro USD most likely cannot go to $1, €1 because we are in an election year. Euro tends to perform better than the dollar. So the reason why we are having a bit of particular time is simply because we have the data reinforcing that bullish momentum for the euro. But we should see possibly a move higher to the upside, and take out this level here. Then we should the euro continue its downtrend. And now crossing over to GBP/USD. GBP/USD has also been in a descending channel, similar to the one that we had on the Euro/USD. However, today we are seeing that it is having a bit of a bullish momentum. And of course, it has also been having a number of liquidity sweeps. The liquidity sweeps have also supported a potential pause in any selling momentum for the pound dollar. And we should see Robert is saying not clear. What is it that I'm not clear about? Yeah. So the CPI data we had CPI data on the I think it was on the day we had the EDP, I think 10th of April. So once to the downside, so the CPI data is actually what started that downtrend for the pound. Okay, and this move that we had for the CPI was a move of roughly about 300. It continued until Friday. From Friday into Monday, and of course into Tuesday. So expect that the pound should stay relatively choppy, and of course, my sound is perfect, Robert, and unless let me just confirm. Oh, okay, all right. Okay, all right. I think great. So apologies for that connection issue, guys. I hope you can hear me now. Awesome. So I think I need to move back a bit. Okay, thanks, Robert. Thanks, Chiku. Let's move back a bit. We are going to go back, I think, to before we had the audio issue. I think there's quite a bit that maybe you guys must have missed. So let's move back to gold. I think from gold. Yeah, so these are my thoughts on gold. So like I said, so on Sunday we saw, and on Friday rather, we saw gold having a very strong move to the upside. Of course, this gold has been having a lot of bearish, rather bullish patterns that have been providing it a lot of bullish momentum. So on Sunday, of course, we had the attack, and the reason why we saw gold moving back to the upside on Monday was because we got, first of all, we had a very nice liquidity sweep candle, the one I've pointed at here. But in addition to that, We also saw that there was some announcement from Israel that they are going to retaliate for that attack that they got from Iran on Sunday night. So that's when we saw gold actually steadily rising, and gold right now is in a steady uptrend that should potentially take it back to 2,400 sometime over the course of a week. Now, of course, I know that the dollar and gold have been strong side by side. So gold has depegged itself in away from the dollar, and it's moving more because of tensions and less because of dollar strength, right? Now, crossing over to Euro USD. Euro USD, just to understand for context purposes, it has been in a very, very strong downtrend. This downtrend began when we had the US CPI, that was on the 10th of April. The US CPI came in very, very hot. And the reason why we saw a very, very sharp move down was because of that CPI. So this move was a move of about 250 pips. And we saw this move coming in from Wednesday into Thursday and then also into Friday. Now, at the start of the week, which was 15th of April, Euro USD has been relatively choppy, but it's also showing signs of extreme exhaustion in the selling. So for the time being, we should see a limited recovery, possibly back to this level here, and possibly to the 200-day moving average. Now the trend is still looking relatively bearish for it, but there has to be some kind of strength. So you could potentially look for some buys on Euro USD, taking it back to this level here, and possibly set your stop loss just in case it breaks lower. Now, when you go to the H4 time frame, yes, so this is the daily time frame. So for the daily time frame, I don't expect us to see the euro getting to parity, okay? I don't expect that to happen. The reasons that caused, or the catalysts that caused the euro to get to parity, uh, I don't think that they are right now at the moment. The last time we saw it really selling was because of the Federal Reserve rate hikes, where the dollar was extremely strong. So yes, we might get a bit of weakness for the euro, but we should stay at least above the parity level, which is somewhere above this blue box. Okay. So for now, I'm expecting a bit of recovery for the euro, and of course, if it fails to recover, then it's going to test much lower levels. If we break below this level here, then we should expect the euro to continue selling and get into this channel here. Now, for the pound, just like the euro, has also showed signs that it is now exhausted with its selling. So we should see maybe between 30 to 40 pip movements to the upside before it retraces back down. But the damage has been done by the CPI. So until we get some weak data from the US, I don't think the pound is going to have a fully fledged recovery. Yeah. Now crossing over to USD JPY is in a steady uptrend. Yesterday there were some indications that the Bank of Japan had done what we call the yen interventions, stealth intervention to save the yen. Stealth intervention, of course, much as someone may think it was a stealth intervention, this was a spike kind of about 85 pips, okay? Not that much of a move. Uh, Gamez, you're saying sound on and off. I don't know. Hello? Mic check. Okay, mic is fine. Gamez, kindly check on your audio, please. Thank you. Okay, so yeah, so this was a sale of about 80 pips. So this wasn't that much of a sale. The last time we got an intervention from the Bank of Japan, the pound, rather the euro dollar, that was I think in 20, was it 2020, 2022? Let's see, it was in 2018. It was in COVID. I think it was in 20. Yes, exactly. This was the last time we got that intervention, right? No, it was in 2023. Was it here? Let me see. Okay. The intervention, the last time we got that intervention, could it have been 2018? It was somewhere in 2022. Yes, this was the time. Yeah, exactly. So if you guys see, if you guys, I don't know if you guys can see my chart very well. I want to show you something on the pound, on the euro, on the dollar pound. This box right here was when we had an intervention from the Bank of Japan. Okay, this was a 500 pip sell. Okay, and this sell-off happened in one evening. It happened in one evening. The dollar pound was down by about 4%. This was an intervention. Now, interventions tend to have much sharper moves. So if you have a move of 100 pips, 80 pips, that's not typical of an intervention. So I still think we should see the the pound, rather, sorry, the dollar pound recovering steadily, and we should see it continuing in a rising trend, possibly to 155. But of course, this is only going to happen with potentially some retracements here and there. But the move to the upside, I think, is still intact for there. So I still think even today, yes, we should see some retracements taking place, maybe over the course of the next few days. But the trend is going to stay relatively bullish, and you should see the dollar pound moving higher. Now, as we wind up and before I go to the questions, I want to show you guys what's happening with the fear index, okay? So the fear index, the VIX, which is the S&P VIX, S&P VIX is just a track. It helps you to track the daily percentage changes in the S&P 500 stocks. And typically when we have uh, very many days of negative percentage changes, it's normally inverse in the case of the VIX, and it tends to recover higher, right? Now, the VIX typically does not usually buy as much. It typically normally buys when we have those negative percentage changes for the S&P stocks, plus also during times when we have really, really escalated tensions, and also sometimes when we have black swan events like we had the COVID, right? That was a black swan event. Now, the last time we had the VIX here, that was around this October areas. This was the time when Israel was invaded by Hamas, okay? Now, looking at where the VIX is now, we can see that it's actually trending close to those levels. And again, showing us that there are some signs of tensions, right? But as of this morning, the tension seem to be easing a bit. And I'm seeing the VIX in some kind of a descending channel. But we should see if we get any more attacks from Israel or from Iran, then it's going to reinforce a move higher for the VIX and possibly provide some selling coming in there for the indices. But for now, I still am expecting us to be bullish on the indices and of course bullish on some of the risk on assets like the pound, like the euro. Short-term bullish, guys, short-term bullish. Those are just my thoughts. Awesome. So if you have any questions, now may be the time to ask to send in your questions, guys, so that we can review them. VIX is on FX Pesa's MT5. You just have to look for it. Yes. Good morning, Peter. Thank you so much for joining us for the live stream for the market snapshot. Peter, you're saying check on the US 30, please. Okay, so the US 30, this is what we are having with it. We seem to have an asymmetrical triangle set up there on the H1 time frame. And of course, like I said, the selling momentum looks extremely exhausted for the Dow. And of course, that's why we are having so many liquidity sweep candles to the upside. Again, showing us that possibly it's going to pause with a bit of selling for now. So we should see some buying momentum kicking in there to the upside. If we see any escalation of tensions this evening and possibly into the US session, then we should see the sell resuming. So your stop loss should be set around these levels here, just in case we see the sell resuming. Then we can expect it to sell and possibly go back to that 24-hour low, which was yesterday. Thank you. Netflix earnings coming tomorrow. Can you check on that? Okay. Thank you, Joseph. Good morning. I did not actually. I had my apologies, guys. I did not check my earnings calendar. So let me just go there quickly. I'm going to switch to the earnings calendar so that I can see how the earnings are going to be like for Netflix. So if I recall, the last time Netflix reported earnings, the earnings actually were good. We saw a very strong move higher for Netflix when it reported its earnings. That was in the last quarter. Netflix has also announced that in 2025, for those of you that have Netflix like myself, they are going to be showing WWE. WWE is going to be streaming on Netflix from 2025. So yeah, so there are a lot of opportunities again, and again for those of you that guilty as charged for sharing passwords. I'm sure you must have seen how hard it is now. I have about 7 people on my Netflix at the moment. So, anyways, Netflix is cracking down on password sharing, which is not really a very big element for low revenue. Plus, also one of the things that also can inhibit higher revenue for it. If you're having a lot of people unable to subscribe but more or less get free Netflix, it usually will affect the revenue levels. So since they have cracked down on that, I expect that we should see over the course of the next few months, we should see Netflix. Yeah. So again, these earnings are coming out after the close. If we see much higher earnings than expected, then we should potentially see a much stronger Nasdaq, and we should see Nasdaq then moving higher, possibly to that 18,000 level. That's in my opinion. And of course, I'm expecting strong earnings from Netflix. However, what will be important will not really be the earnings per se, but the forward guidance. Okay. The forward guidance is going to be very, very important because it's going to tell us what they expect for the next quarter. And of course, which will be a driver for any moves for it after the earnings release. Awesome. Someone asked, check on S&P 500. So S&P 500, let me see what is happening on S&P. Okay, so for S&P, again, like I said, guys, the selling momentum is really exhausted. Okay, and so we should see a temporary recovery for it, possibly over the course of the US session. However, if we see a break to the downside or a move back lower, then we should see the selling momentum continuing. But for now, it seems to have paused a bit on its selling momentum, and that will allow it then to recover a little bit, possibly out of this channel, and of course, back to this level here. But the downtrend is still intact. We're having a downtrend market right now in the indices from 1st April, I think. From 1st April, the downtrend is still intact for these indices, so they're going to stay in a downtrend. Yeah. So S&P buy, and of course set your stop loss at the 7-day low, somewhere around there, so that in case it continues the downtrend, you do not get stopped out with your trades. Awesome. Any more questions, guys? Hey, Leon, thank you for joining in. Leon, thank you so much. Leon is joining us from Kuwait. Awesome. Uh, let's see, XAU analysis. Okay. All right. So for gold, now you see, gold is facing a lot of demand. First of all, from the central banks. I would want to, if you're a gold trader, I just want to take you guys back to my snapshot for Friday. If you can, check out FX Pesa's playlists and you check for my video for Friday, snapshot for Friday. I covered gold and I covered it in more detail by showing you the central bank purchases, which have been relatively high, especially for some countries like China and also the Czech Republic. So I expect gold to move higher today. And of course, should we see gold selling momentum kick in, we need to break through particular structures. The first one is going to first be this one of 2000 of 2000 2365. Okay, that's the first one. If we take out this break, then we'll have to wait and see if gold manages to take out this one right here. Okay, where you have my arrow. But for now, I'm expecting gold to first create some kind of a double top somewhere towards 2421. When we have that double top, then I think gold will have topped and we should see it retracing. But there are still so many uh, signs that gold could stay strong, and it needs trading with very, very tight stops. So, but for now, I'm expecting gold to move higher, at least for today. Yeah. If there are no more questions, guys, I think that's it for today. I wish you all happy trading, guys. Let's trade safe. Trade safe, and of course, if you in Kampala, we have trading classes. If you want to be part of our online virtual classes, we have virtual classes all through the week, from Monday to Friday. Please get in touch with your account manager and see how you can benefit from that. I wish you all guys an awesome day. Thank you so much for tuning in for the snapshot. Cheers, guys, and happy trading.